So far, Russia's oil exports have not slowed down a bit from the war in Ukraine and international sanctions. In fact, Russia exported more oil in April than it did before the war. And high oil prices mean Moscow is raking in money. That's one reason Europe is considering banning Russian oil. Current sanctions are not hurting Moscow enough. But Europe gets more of its oil from Russia than from anywhere else. It would have to make up for those banned barrels somewhere else. And that won't be easy. And it's likely to push oil prices everywhere up even further. When Russia invaded Ukraine, sanctions aimed to starve the Russian economy. But the sanctions didn't touch Russia's energy exports. That's largely because Europe depends on them. Several big Europe-based energy companies have said they will stop buying Russian oil.
But the case is still that a lot of that crude is going into European countries. Very few have halted flows.
Cargo tracking firm Kepler says Russia's exports to Europe dropped a bit in March and April, but not much.
As a number of these European countries have realized that, yes, they're being chastised, yes, they're being named and shamed for taking these crude and products, there isn't anything to stop them actually taking it still. And so then we've seen them continuing. And so there hasn't really been much of a change. And it appears there won't be much of a change until we see an embargo or sanctions put on those flows.
Those flows have actually increased to other parts of the world. Overall, Russia is exporting more oil now than it has in years. Because some buyers are shying away from Russian oil, Moscow has had to sell it at a deep discount, around 35%, which is great for countries like India.
Prior to the invasion of Ukraine, India wasn't really much of a buyer of Russian crude. They bought it sporadically last year. They brought in like 14 million barrels over the whole period. But since the invasion, and because that oil has got so cheap, by early June, they have brought in like double that amount.
Even with the discount, Russia stands to make more money this year than last year because oil prices are so high.
Policymakers in Europe are uncomfortable with this because they feel like it's not putting much pressure on the Russian government. It's not really depriving them of revenue. So they're looking at options now to try to ratchet up that pressure and take more Russian oil off the market and create a bigger revenue impact.
Banning Russian oil would leave Europe short about 4.5 million barrels a day. That oil would have to come from somewhere else. There's just one problem.
It's a tight oil market. I mean, it was a tight oil market before Russia invaded Ukraine. The OPEC Plus countries really don't have a lot of spare capacity that they can bring online. So everyone's kind of waiting to see what happens in the United States. And growth there has been, lower than many people would like.
U.S. oil companies are struggling to find workers. Equipment and supplies are hard to find. And even though the United States is now the world's largest oil producer, the industry is having trouble raising money to increase production.
We had 10 years of enormous expansion in oil production in the United States. The first decade of the shale boom. I mean, incredible growth year on year. It was good for production, it was good for revenues, provided a lot of jobs. But from an investor standpoint, it was not a success.
The U.S. oil boom never really paid off for investors, and they're not eager to pour more money into drilling like they did a few years ago. Prices are high enough now to lure companies back in. U.S. output may grow by about 1 million barrels per day by the end of the year. But that won't be enough to plug the hole in Europe from banning Russian oil.
Really, Europe is going to have to pull in from all manner of places. They're replacing some of that Russian crude already with crude from the North Sea. They're going to have to pull from the Middle East as well, from West Africa, from essentially everywhere to be replacing, millions of barrels of crude a day. So that's ultimately going to result in higher prices.
Those higher prices will hurt around the world. But it would put more pressure on Russia. 60% of its oil exports go to Europe.
Well, the challenge for Russia is that because they send so much into Europe, they're really going to struggle to find another destination.
India and China will probably take some, but they don't have the infrastructure to take it all. And Russia probably will have to cut the price even further. It's a major global shift in oil markets that's going to take some time to work out.